Hello, good morning. My name is Jakes, and I'm the CEO of Opulent Capital Services Limited. And this is the campaign we are running right now, Opulent Wealth Creation Campaign. I'm here to just describe some strategies that you may need. And the first one I will be doing now is the trend trading strategy. Now, you already have this setting before now. The only thing I'm adding here is the Bollinger Band, and this is the settings for the now. This is a setting for the Bollinger Band. Um, Period is 34. The deviation is 1.619. Apply to close. The shift is 0, and then the style is medium sea green. You can choose any color that you want. So, and that is the last thing I added on this. But if you have a system, I could send this template for you. So you will just load it, and then I added one expert indicator here for people who have a system. All right, this indicator, but well, it may be useful, it may not be, but this system is very powerful, guys. It's very powerful. Now, the first thing you need to know is that if you're trading any parameter, okay, any parameter, you should know the nature of how the parameter is. Let me say the nature of how it behaves, okay, how it behaves. Now, let's do a quick one. Now, let me use this chart to describe how it behaves. Let me just, and then our strategy before we go back to the main chart, and then we do what we're supposed to do. Now, based on the nature of crash and boom, it is designed to go up and go down. Even if it's going to continue up, it will at least come 50% um, down or 50% retracement before it continues. So this is the design of crash and boom. All right. So you can see that crash 500 index, this is 30-minute, and then you say average one drop occurs in the price series every 500 ticks. So there's always a drop, there's always a drop in the crash, and then the trend for crash, of course, is up. Okay, so that is how it is. So when you are trending up, the market is actually choppy, so it takes more time. It takes more time. So let's just see how many candles it took from here to here. Now you can see it took 342 bars, okay, 242 bars, let me call it bars, okay. So it took 200 and 341 bars, okay, to get to that point. But when it's crashing down, it doesn't take that much. It just crash, and then if you want a quick income, you should trade the crash trade in the direction of the parameter, and then this is just 97, the same distance, okay, the same distance. So you see, going trading up, it will take more time because it is going against the parameter, which is crash. But when you pick the trade from up here and you're coming down, then it takes lesser time, and then you're in money in a short time. So you can design your own strategy to pick whatever. You can say, okay, I can only sell crash and buy boom, all right. But you will be profitable, sure, if you go the two ways. So I want to use this opportunity to just say this strategy is based on picking of the extremes, okay, is based on picking of the extremes. So we just want to pick the extremes, okay. We just want to trade the extremes here and here and here and here. You see, the extremes is what we're picking, not the small turns here and there. No, not the small turns. So we must strategize, maybe get a strategy to help us pick the extremes. So for example, let me use the RSI here, RSI 14, and then to just explain how the strategy works, okay. But there are more things we'll add. For example, how RSI 14 works, because RSI is an oscillator. So when it is over extended, you look for the overextended zone. So when it reaches 70, you sell. It reaches 30, you buy. But now I'm looking for something like 80. Okay, let's just use 80 for example here. So when RSI is close to 80, what I should be looking for is a sell. Okay, so when it's close to that 20 or is on 20, I should be looking for a buy, and this based on the strategy. So let's go for a sell for here. Now the RSI is close to 20. Okay, so if I am selling at this point, if I'm selling at this point, the price, okay, if I'm buying, sorry, if at 20 you buy, at 80 you sell. So if I'm buying at this point, all right, let me see, insert object shapes, no shapes, arrow, good. Okay, if I'm buying at this point, um um I'm expecting that the market will go up, and it goes up, and this is 30 minutes, guys. So from here to here, how many points do we have? We have about 20, 219,159 points. So how you calculate points is that 1,000 points is equals to 1 pip. So 2,000 points is equals to two pips, and 10,000 points is equals to 10 pips. So this is how, if it's in points, this is how you calculate it. All right. So you see, you must have made a lot of money, and then another place again you're going to sell is you're going to buy is here because it's closed. So now this is where our strategy works. Now instead of just, you see this place, it just bought. This place just, when you click, you bought, it just went. Okay, it went to this place. But on this other side, it didn't just go. When you place your buy here, you place your buy here, now it went and then went against you. Okay, so for this strategy we make use of limits, either buy limit or sell limit. Okay, so we can maximize profit. Now your limit is saying that peradventure the trade doesn't go in my direction and decide to reverse. For example, now, okay, if you were not there to close the trade at this point and then it reversed down to this point, now you will set limit. For example, for crash, um I will prefer that you use, let me say, a percentage of 0.3 something. Yes, 0.3. Okay, let me see, use a limiter. Yes, so for example, you place a buy here, and then the market went all this way, all this, it went to this place, and you were not there to close the trade, and then it reversed and then went against you like this. So what you are saying by placing limit is that peradventure the market didn't just buy immediately, and then you place your limit here. For example, let's just say you placed it here, and then you place another limit here. Okay, you place one limit here, you place one limit here, you place another limit here. Now the moment the market reach the first limit, first buy limit, it will activate into a buy, and then when it reach the second sell limit, buy limit, it will activate into another buy. Okay, so if for example this price, this one, reaches, was activated, and it went here, and you were not there to close it, and then it came back to where it started from, and then it comes to this place, this one will be your negative. Okay, The first one will be on negative. So if it's on negative, it means let's, for example, it moves from here to here, and uh, we have moved 10 pips or whatever it is. Okay, so what we are saying now is that you will see, let's just work in terms of dollars from here to here. If the pip was to your calculation of your pip was maybe is in dollars, so from here to here you must have seen 5. The first cell will be -5. The sell limit will activate in the first buy will be -5. The buy limit will activate into a buy and will become 0.00. All right, so when you move down to this place and the buy limit here activates again, this first cell will become -10. The buy limit here that activated here will become -5, and then this will be 0.00. Okay, so now the strategy is simple. Once, because we know that the market must still go up, okay, so once the market return back to where it started from, this limit here will become 10 plus 10. This limit here will become 5. So coming back to where you started from, you are already in $15 profit. Guys, you're already in $15 profit. Okay, so and then if the market, when the market move all to this place, it's just like double of this. So this one here will become 20. This one here will become 20, will become 15, and then this now will become 10. So you must have made let me say $45, guys. $45 in one trade. So this is the logic behind using limits. So another point we are picking is, okay, let's just say we pick this place at this point. Okay, can you see where it reaches close to touching 80, and we want to sell at this point? Now, if we are selling at this point, it means, okay, we are anticipating the market to calm down, right? We are anticipating the market to calm down, crashing down. But the market didn't crash down immediately. It went up before crashing down. Okay, so what you're going to do is, when you sell at this point, you will set your sell limit. Okay, so I advise like 3 to 4 sell limit. Okay, okay, so when you sell at this point, you first set your sell limit at this point and set another sell limit at this point. Okay, now what it means is, peradventure this market didn't sell and it goes up, broker enter another sell for me. That's the description for sell minute. So let's use the same example again. If you enter the sell and the market maybe moves from here to here and is supposed to give you $10, this sell will be -10 by the time it reaches this place. And then the market came down to where it started from. Okay, it means this one activated and then it came down, so this is going to be +10 if you close the trade at exact point where the both of them happen. So this one is going to be 0.00, this one is going to be +10. But in case you are not there to close the trade and it went against you again to this point, this one will become -20. This one will become -10, and this will be 0.00. So by the time the market reverse and come down to the same position where you entered this, the first limit, the last limit here, which is up, will become 20 plus 20. This one will become 10, and then this will be 0.00. So you see, you already are coming out with $30. Okay, here. And then look at, if you endure that the market reach here is almost, let me say, double of this or half and quarter of this. So this one would have come out with something like $35. This will be like $25. This will be like $15. So how many is this? 4, 5, 6, 7. So you are coming out with something like $75 in one trade, instead of just maybe from here to here, you're not there, and then reverse like this, and then it came here. So you see, so that is the logic of the limit. Okay, that's the logic of the limit, and we are going to be applying it in the trade going forward. Ladies and gentlemen, stay tuned for video 2 or video lesson 2.